Absolute retracement is a trading indicator designed to anticipate potential levels of price support off of all-time high or significant price highs and levels of price resistance off an all-time or significant price low. What's important to see out of this is this retracement indicator, as opposed to relative retracement and trend factor, is meant to be used primarily off of an all-time high, or as I'll get here in a second, retracements of at least 38.2%. So once again, absolute retracement is applied when no prior reference level exists. That's important here. And with regards to when you can recalculate it, every time there's immediate rally, intermediate rally of at least 138.2%, the downside absolute retracements can be recalculated. So you can see in this slide right here, we've exceeded the 1.382% absolute retracement. And so that's where you could project a new downside level from. So if you're projecting downside over here from the left, this is where you could project a new one since we've exceeded 1.382. Now, every time in reverse, every time there is an intermediate decline of at least 38.2%, the upside absolute retracements should be recalculated. So in this example, if we declined 38.2% from this high, that's where you can project a new upside absolute retracement level from, as opposed to this low. And we'll get into examples here shortly. But one thing that's really important to focus on here is absolute retracement is applied to daily charts only. When you think about where you apply your retracements, if we're using the close for the value, which I'll show here in a minute or two, if you're using a weekly chart, you're using the weekly close. That's Friday's close. That may not be, the high close. That could have been on a Monday or a Tuesday. So it's important to only use absolute retracement on daily charts. So now I'll talk about downside absolute retracement. So you can see right here, absolute retracement is calculated from the high bar's close, as that is the anchor or equilibrium level. When the following day has a high that fails to exceed the high day's close, the stable close parameter will use that day's close instead of the high day's close to multiply the ratios. So you can see here on this chart, I have the close highlighted in red with kind of a blue circle around it. You'll notice that the next price bar's high, where the yellow circle is, does not exceed the high day's close. So what this indicator will do, it will say the stable close is actually not this high day's close, but the following price bar's close. Because you can see here to the right, this high intersects that close. This selection process will continue after the high until price gaps on the downside no longer occur. In other words, the stable close parameter locates the close with no downside price gaps after the high day's close is identified. This is a default setting. I'm kind of just going into the specifics here. So whenever you apply absolute retracement on your chart, there's no need to eyeball this. The study will automatically do it for you. You can open up the absolute retracement settings and you can see the stable close parameter and also how many price bars you want to look for a stable close. By default, it should be set to 1 or 2. So how do we calculate absolute retracement levels? You can see here we're taking the high bar and we're taking the close. Notice how it is a stable close. And we're multiplying that level by 0.618. The next level, we're taking the close times 0.5, and that will identify the second downside level of potential support. And the third, 382, or the close times 0.382%, and that will identify the third downside level of potential support. There's also an optional downside level of 0.236. For those who aren't, familiar with Fibonacci numbers, this is how 0.236 is identified. So 0.618 minus 0.382, and you can also do 0.618 times 0.382. So the 23.6% level is really important. You'll notice here that it's often used as potential indication of bankruptcy or a minimum of many years of sideways price action with investors uncertain of failure. So whenever you see a 0.236 level, definitely pay attention to that. It's often a pretty critical price. You'll notice in those charts that I just showed, there are some solid red lines and some dashed red lines. When we're talking about downside levels, that's where we get into the red color. And you'll notice that solid indicates a qualified and confirmed breakout line status. And then the disqualified is a dashed level. So what does that mean? When a retracement level is qualified and confirmed, price typically gravitates to the next retracement level, as you'll see in this example right here. So each downside level serves as potential support, or if it's broken, ideally price moves to the next retracement level. So you can see here the 618 level, we had an up close on the bar prior. We had a down close. That down close was through the level, exceeded the level. The next day opened lower, traded lower than all prior three, and recorded a down close. So that's part of the breakout qualifiers to turn this 618 level from dash to solid. And as this slide shows, what that means is continued momentum in the direction of the breakout, and in this example to the downside. And the likely expectation is the next level, which is the 50%. So now we'll get into absolute retracement upside. So we're taking the low price bar's close. That's the anchor or equilibrium level. And then similar to when we talked about the downside, for the upside, when the following price bar's low fails to exceed the low day's close, the stable close parameter will automatically use that day's close instead of the low day's close to project or multiply the ratios. As I mentioned, this is default enabled, and it will continue to look for that stable close until the price or this requirement is met. So as shown here at the low, you can see here that the low of the next price bar does not intersect the close. So we're looking at the next day, the day after the low bar, for a stable close. And yep, the low intersects the close. That's a stable close. And that would be used to project upside absolute retracement levels. So as opposed to the downside, which are 0.382 for upside, we're multiplying it by 1.382. And that would be the first level of potential resistance. The close times 1.5 would be the second level. And then the close times 1.618 would be the third level. Similar to the downside, a solid line indicates a qualified and confirmed breakout, and a dashed indicates a disqualified breakout. So similar concept. You can see here, we had a down close. Now we had an up close. That up close is greater than the 1.382 absolute retracement. The next day opened higher than the previous price bar's close, recorded a high greater than the prior three, and an up close. And so once the 1.382 qualified and confirmed, the likely expectation was price to move to the next level, which is the 1.5%. So going through a couple examples, these are just blank charts, or these are examples from Symbolic, but we want to kind of show some real life, or what absolute retracement looks like within Symbolic. You can see here the downside projection, the 0.618 was pretty timely. Here's another example of not only the 0.618, but also the 50%. You can see how this is often all-time high. These are all daily charts. And so you can kind of get an idea for how much time has played into this example. Price went right down to the 618, and then it came down, qualified to confirm. What did price do? Traded to the next level, which is the 50% level. Here's another example of An elective setting within symbolic, there are multiple parameters for users to add additional absolute retracement calculation. In this example of 200%, or you can see here 2.00. Here's another daily chart example. You can see how much time played into this one as well. Another 200% example. And here's an example of 0.236. So definitely a really important indicator to use. Once again, absolute retracement is used on daily charts only and are meant to be used at significant or all-time highs. And they're going to identify longer-term projection values, and you can recalculate absolute retracement whenever there is a 38.2% retracement.